This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on December 23rd, 2011. Our time is 8:40 Mountain, 10:40 Eastern. The radio show runs on AM 640 in Toronto and 630 CHED in Edmonton. If you ever miss a radio show, you can catch us online at HESradio.com. Also, Harold's website, rarecoloreddiamonds.com. This show running early in the morning in Edmonton and Toronto. We want to wish everyone a Merry Christmas, Happy New Year, Happy Holidays. We will be on next week as well. Keep that in mind. And Harold, it was a very, very busy week. For those that would like to receive our free weekly newsletter, give us a call. Tons of brand new information in the newsletter this week. 1-866-623-2002 to receive our free weekly newsletter. We send out via email. If you'd like to receive it, we'll be happy to send it out to you. You can take a look at it during the holidays. One of the big stories, though, the ECB came to the rescue of 500 banks, and they borrowed 490 billion euros. And let's be honest, Harold, if the ECB didn't pony up that money, we would have had a lot of banks that would have been going under, and they're going to be borrowing more money again in February. And the question is, where is that money coming from? And let's be honest, I think personally it's printed money.
Well, it has to be, Randy, again, because there's not enough money around to bail out all of Europe and the United States. So, again, that's why we continue to be so bullish on the hard asset market, is because I'm 100% convinced that everything that's being done in Europe and in the United States as far as, producing new money is inflationary. And once we get through everything and all the confusion and everything that's going in the markets right now, I think you get a much better picture. So basically, printing money is like any other commodity. When there's an overabundance of a commodity and the demand is not there, the prices are going to go down. And that's exactly what will continue to happen with the U.S. dollar and with the euro. But again, at this particular point, the euro is a weaker currency, and that's why the metals markets have fallen off, and that's why the U.S. dollar has strengthened. It's only because of the weakness of the euro. And again, that is not going to last forever. So this week, again, even though it's a very lightly traded week and Christmas and everything here, and oh, by the way, very, very happy holidays to all of our listeners. I hope you had a great year, and I hope you have a very happy holiday, and next year should be very, very interesting for all of us. All in all, the market's trading still in its range as we're trading the show today, and the markets are up $4 in gold. We're trading right now just above $1,600 at $1,610. The silver market's trading right at around $30. We're up 22 cents. Platinum market's trading up $9 at $14.36. And palladium's up $13 at $6.69. Again, a lot of the traders are not here at this point. New York is like a ghost town, and there's not a lot of trading going on, so you've got these, minor swings happening in the market. The oil market is back up to $100. We're very, very bullish on oil. We think that oil is the key to inflation that's coming up over the next couple of years. So again, watch the oil price. But as we're trading today, oil's trading right now at $99.72. We have been above the $100 level several times. Again, even without a war in the Middle East, I anticipate that the price of oil is going to hit $150. However, we give it a 75% chance that there's going to be a war in the Middle East before the first half of 2012 is over that could push oil prices to $200 to $250. Read in the newsletter this week all the reports about Iran cutting off the Strait of Hormuz. Again, they're strategically located, and by cutting off the Strait of Hormuz, that stops 40% of the oil tankers getting into the Persian Gulf. Now, I think that if Iran does that, and they will definitely do that, if further sanctions are brought against them, or if Israel or United States attacks and takes out their nuclear sites, you're going to see some serious problems, and you're going to see that Iran is a country that you don't really want to get into a war with. On top of that, they do control that Strait of Hormuz, which could raise the price of oil to double to where it is at this point. And realizing that so many countries in the world are in dire straits financially, a rise in oil prices is not something that they're looking forward to. Now, on the other hand, if Iran does cut off the Strait of Hormuz, it is my belief that the U.S. will move its warships out of the Persian Gulf and into the Strait, and then you're going to see the price of oil go even higher. So, again, be prepared for 2012. It's possibly going to be the most dangerous year you've ever seen, aside from 2008. That's when the Lehman went under, and that's when the financial markets went into the biggest tailspin that we've ever seen. So all in all, here's what we see. First of all, so you know, there's so much talk about the gold and silver markets, about the financial markets, how the move in gold and silver is over, and we're in a major bear market. That, in my opinion, is the furthest thing from the truth. I mean, the people on Wall Street would love to see that as the truth, but in my opinion, there's no way in the world that that is happening. You don't want to be emotional about these markets. You only want to be logical about them. And when you trade with emotion, most of the times you're going to make a mistake and you're going to end up regretting it. When you trade with logic, you know, you can keep your head about you and you can weather these type of storms. So basically, gold has been as high as $1,900 this year, and we've traded actually down into the 1,500s. So we've had a fairly big swing in the gold market this year, but that's comparable to what we've had in other years. In actual fact, don't forget in 2008, the price of gold went from $1,000 down to $700 in just a month or two. That's a 30% drop, very similar to the drop that we just got. And then after gold went from $1,000 down to $700, it proceeded to go all the way up to $1,900. So again, if you remember back then in 2008, when the price of gold went from 1,000 to 700, and silver was even more dramatic. Silver went from 21 all the way down to $9. But then silver came all the way back and hit 50. So again, I'm not concerned about these pullbacks. I would be concerned if the overall inflationary implications of the market had changed. If they came up with some miracle that they were able to save the banks and the financial world and the debts, you know, took care of themselves type of thing. But there's no way in the world that that is going to happen. We're going to be in this situation for at least another 5 years. And the fact is that because there is no money around, the fact is that the governments are printing money, and they'll continue to print money because what it gives them the opportunity to do is to prolong the agony. It gives them an opportunity to pay off their debts, not be stressed about it, and have some time to think about what the solution to the problem is. The fact is that at this point, they're going the total opposite way as to what they should be doing. So I have total confidence that we will have extreme inflation. It's already here. They've admitted it in China that they've got 10% inflation. India's got 9 or 10% inflation. So how is it possible that they have inflation and the U.S. doesn't? It makes absolutely no sense. So myself personally, again, because I own physical gold, physical silver, and physical diamonds, I'm not concerned about these pullbacks because, again, we've seen 9 of them since we've been in this bull market in the last 10 years. So here's what I see that could possibly happen going in. First of all, as we're taping the show today, the price of gold is above $1,600. There's very heavy support at $1,580, $1,525, and $1,450. On the upside, what we need to do is get above 17 and a quarter in order for it to, in my opinion, to gain strength going into the new year. And I'm very comfortable with 17.25 being taken out and much higher prices going into 2012. 2022 and $2,500 is very possible, and I am looking forward to those numbers going into 2012. Don't get me wrong; it's going to be a very vicious year for the markets. We're going to see huge price swings. But again, if you're not heavily leveraged, you can withstand those price swings and, again, be intact because the bull market is still intact. So again, on the downside, I see 1580, 1525, and 1450 as possible prices on the downside for gold. On the upside, I'd like to see gold break 1725. That would bring us back to $1,900 to $2,000 gold, and I'm very comfortable hitting $2,250 to $2,500 gold sometime in 2012. Silver, there's very, very heavy support at $28. Then at 26, which is the price that we hit going back into May, and then $20. And don't let $20 silver scare you, because at $20 silver, the buying would be absolutely massive. And again, that would not negate the bull market. On the upside, I'd like to see silver take out the $34 and the $38 level to resume its bull market on the upside, and then eventually take out $50 and $60 to $65 possibly next year. So with the volatility in the market and everything that we see happening with QE3, printing of money in Europe and in the United States, and what's going to happen in the Middle East, tells me that we're still going to have massive inflation, and the U.S. is doing nothing to curb inflation because they're keeping interest rates at zero. The oil market's sitting at 100. It's got heavy support at $85. But on the upside, we could see 150. We could see 250 to 350, depending on what happens in the Middle East. So basically, that's what I see happening in oil. I'm very, very bullish on oil. With or without a war in the Middle East, I do see oil still going back up to $150. The U.S. dollar right now is at 80 cents. One of the reasons why gold and silver are down at this point is because the U.S. dollar is up. And it's up against the euro, but a strong dollar is not good for gold and silver. So basically at 80 cents, we've got gold sitting at about $1,600 and gold at about $30. At 82 cents, we're going to have gold at about that 15 and a quarter level and silver at 26. And if we do get to 86 cents, which I would not want to see, but if we do, that'll take us to that 14.50 level in gold and $20 in silver. If we did get anywhere close to $20 in silver, 2022, I'd be a massive buyer of silver at that point. The market will remain choppy going through the first quarter of 2012. In March, there's going to be QE3, and we believe that the Federal Reserve will print close to $1 trillion in order to try to jumpstart the U.S. economy. It has never happened in the past that it's been successful, and I highly doubt it'll happen this time. However, a printing of $1 trillion is extremely inflationary and will move the price of gold tremendously higher. Don't forget, the three major problems going into 2012 is in Europe, which is extremely inflationary, the U.S., which is extremely inflationary, and a 75% chance of a war in the Middle East with $200 oil is extremely inflationary. Again, those are the three major areas going into next year that we have to pay attention to. And one last thing, this MF Global situation is such a disaster. That was that commodity brokerage firm that stole $1.2 billion out of client segregated funds. That's like a lawyer stealing your escrow funds. It will ruin the futures market. I don't know why anybody would even invest in futures, because the exchanges that are supposed to make good on these bad debts are not doing that. And that means that the people lost their money. It would like having your money in the bank and all of a sudden the bank closing down and you not having any insurance and the bank walks away with your money. That's the exact same thing that happened with MF Global. So one other reason why commodities have been down over the last 3-4 weeks is unwinding of positions from this massive scam at MF Global. And by the way, it's the U.S. futures regulators, the Commodity Futures Trading Commission, and the SEC, the Securities Exchange Commission, these inept organizations that don't police the futures markets and the stock markets. I don't know why anybody would put their monies in those markets, because, again, this has been happening for the last several years. Bernie Madoff, Stanford Financial, and now this MF Global, one of the worst situations, Randy, that you could ever see.
Well, I know that Barry Ritholtz had a very good question. I saw him on Bloomberg, and he said, how was it possible for a broker-dealer to tap segregated client monies to speculate in risky assets and lose billions? We have that story in our newsletter. If you would like to learn more about investing in precious metals, get our free weekly newsletter. The telephone number 1-866-623-2002, 1-866-623-2002. The website is wwpmc.com. There's only one company that Harold Siegel recommends when it comes to investing in precious metals. That is Worldwide Precious Metals. They have lowered their commissions from 5% to 2% for the rest of this year. They believe the metals are on sale. So for a limited time, you can connect with them at 1-866-623-2002, wwpmc.com, and start your own precious metals investment account or add to your precious metals investment account and have a reduced commission. should mention, if you'd like to receive our free weekly newsletter, Speak with Worldwide, they will arrange to send it out to you free of charge via email every week. And the question is, as we get to the end of the year, do you have precious metals in your portfolio? If you don't, now is the time to take a serious look at having an allocation of 5 to 10% at minimum precious metals in your portfolio. Worldwide, give them a chance to earn your business. Obviously, there are a lot of different companies out there now. We've been doing our show. I've been coming up 10 years with Harold in February. Harold has been doing it 10 years. Worldwide has been around 10 years. Back then, we were really the only ones on the radio talking about precious metals investing. Now there are other companies out there. But we were first, and give Worldwide a chance to earn your business. Speak with them at 1-866-623-2002. One of the things that is in the newsletter, a great quote that I found, Thomas Jefferson, and I think this is going to be one of the things that is going to be featured in the United States during the debates for the presidency. I predict future happiness for Americans if they can prevent the government from wasting the labors of the people under pretense of taking care of them. That from Thomas Jefferson, and I think that will be the big debate between Barack Obama and my prediction is Mitt Romney on the Republican side. As do you want Eastern European socialism or European socialism, or do you want the United States run similar to what has been happening over the past years? Another question that needs to be answered as well, Gold Money had a great quote. At some point, the absurdity of what Jim Grant calls the return-free risk of lending money to the United States government in order to lock in a negative real return will wear thin on investors. Why on earth should people freely lend money to Uncle Sam if they're going to be repaid in grossly devalued dollars with a yield that is well below the U.S. inflation rate? And that is very positive for precious metals. You have to keep that in mind, is that people that are lending the United States money for 10, 20, 30 years, they're getting a negative rate of return. And how long can that continue? How long are people going to allow the United States? Now they're $15 trillion in debt. You add in all their obligations. Some people say it's 50, 60, 70 trillion dollars. Others say $200 trillion. How long can that go on? And one of the stories that I wanted to bring to everyone's attention, because I think this is so important, and this may be one of the main reasons why you want to own precious metals. This is in the newsletter. Get our newsletter. Read this story. There is an 82% chance that California's public pension system will run out of money. A new study finds California's big government worker retirement funds short $498 billion. California is on a destructive path of grossly expanding debt to finance public worker pensions, much like European nations. Unless dramatic steps are taken soon, the Golden State will suffer its own version of Greek tragedy. And that is all the different pension systems that they have for public employees in the United States, underfunded by $498 billion, $500 billion. The three systems collectively have promised $498 billion in payments they can't fully pay. And the Stanford study concluded that a 17% increase in 2 years, putting off a solution, adds $3.4 million to the tab for every day of delay. Harold, you look at precious metals and all the different reasons to invest, and obviously in 2012 there's possibly a conflict with Iran. North Korea has a new leader. Iraqi civil war. Pakistan and the United States have a tenuous relationship. The Russian elections are coming up. Also, you have the friction between Iran and Israel. There are lots of geopolitical reasons, but on the financial side of things, the United States is in massive, massive debt. There's sovereign debt, U.S. debt, states are in trouble, cities are in trouble, and these pension numbers that I've just read you, to me, in my mind, if you don't have an allocation of precious metals in your portfolio, I really seriously question, you're making a massive, massive mistake if you don't.
Well, you don't, because it's insurance policies, and we all have insurance policies. We have insurance on our car, on our house, on our life, on our health, and everything. There's no reason that we shouldn't have insurance against, a complete collapse of the financial system if that's actually going to happen. And a lot of people do believe that's going to happen. It doesn't feel like it, but all the fundamentals are there for it to happen. And what's happening in California is not only for California. It's in so many other states within the United States. Again, but this has been going on for so long, it's like a domino effect. And now all of these, dominoes are starting to fall. And again, there just isn't enough money in the world in order to get out of this trouble. So what they will continue to do is print and print and print, because at this particular point it's the only solution, even though it's a short-term solution. But by doing so, these are action-reaction type of markets. For every action, there is a reaction. And basically, with high inflation, with printing of money, comes high inflation. With high oil prices becomes high inflation. With high food prices comes high inflation, and all these situations are present in the market at this point. So again, these pullbacks in the market do not concern me. There's no way in the world that this bull market is even close to being over, and that's not just wishful thinking. The fact is that the markets will always be the markets, and they're going to tell you what to do. But the bottom line is, we are nowhere close to being finished on this bull market in gold and silver, because we haven't dealt with the major reason why we bought it in the first place, which is massive inflation, which I am positive we have and are going to have to a more extreme level.
In our newsletter this week, Jeff Clark from Casey Research said, look for an entrance, not an exit to precious metals. Obviously, a couple of weeks ago, we saw a pullback. We had Dennis Gartman come out and say that the bull market was over. And then this week, as typical of Dennis Gartman, saying, well, my statements were misconstrued. I never said that the bull market was over. Okay. Yeah. Jeff Clark said, ask yourself some basic questions. Is the current support for the U.S. dollar an honest indication of its health? Are the sovereign debt problems in Europe solved? How will the U.S. repay its $15 trillion debt load without some current level of inflation and currency dilution? Is there likely to be more money printed in the future or less? Are real interest rates positive yet? Has gold really lost its safe haven status as a result of one bad week? And one more, what is the mainstream media's record on forecasting precious metals prices? Our take won't surprise you. Not one fact relating to the trend for gold changed a couple of weeks ago. We remain strongly bullish. Would I buy now? Given that each metal has already met its average decline and both have seen more corrections this year than any other year, we're likely closer to the bottom than the top. Either way, my advice is to spend a little more time watching the drivers for gold, the fundamentals, and a little less time worrying about the price. Until those things change, look for an entrance, not an exit, to precious metals. That is a must-read article, along with so many others. But the one that I want everyone to read this week is there's an 82% chance the California public pension system will run out of money. And I think that the United States, with their entitlement problems, not only on a national level, but obviously on a statewide and even citywide, I know San Diego has some major problems, citywide level, they have some serious issues. That's why, as Harold said, you need that insurance policy in your portfolio, precious metals. There's only one company that Harold recommends you use, Worldwide Precious Metals. Their telephone number, 1-866-623-2002. The website, wwpmc.com. Going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on December 23rd, 2011 at 9:06 Mountain, 11:06 Eastern. Radio show runs on AM 640 in Toronto, 630 CHED in Edmonton. If you ever miss a radio show, catch us online, HESradio.com, also rarecoloreddiamonds.com. And we should mention that we will be on the air obviously next weekend as well. For those in Toronto, it will be the last day of the year, and for those in Edmonton, it will be the first day of 2012. Merry Christmas, Happy New Year, and Happy Holidays to all our radio listeners. throughout not only Canada, but those that listen around the world as well. Harold's website for diamonds is rarecoloreddiamonds.com. Our featured diamond of the week. If you go to the website, you can see the video for the diamond. It is stunning. This week's diamond is a .037 carat radiant cut fancy intense purplish pink diamond. It's an Argyle. The Argyle mine supplies about 90 to 95% of the world's pink diamonds, with the mine set to shut down in 6 short years. Pink Argyle diamonds have the ability to jump substantially in price in the years ahead. Go to Harold's website, rarecoloreddiamonds.com. Take a look at the featured diamond. In fact, at a recent Christie's New York Magnificent Jewel Sale, October 18th, 2011, at Rockefeller Plaza, Lot 325 was a ring set with a pear-shaped fancy purplish pink diamond. Now, granted, it was 8.20 carats, but the estimate on it was $1.25 million, and it actually sold for $2 million, almost double what it was expected to go for. And we actually have auction results in our newsletter this week. You can get them from Harold. Speak with Harold by going to rarecoloreddiamonds.com or 1-800-432-1022, 1-800-432-1022. You can get the auction results, get your name on the list for our free weekly newsletter. Sotheby's Magnificent Jewel Sale. This is from December the 7th, 2011 in New York City. Lot 159, a pair of 18-karat gold and fancy yellow diamond ear studs. The estimate on it was $60,000 to $80,000. It sold for $116,500. Lot 163, platinum fancy pink diamond and diamond ring. The estimate on it, $100,000 to $200,000. It sold for $278,500. Also, lot 195, a platinum 18-karat gold and fancy vivid yellow diamond ring from Bulgaria, and the estimate on it, $90,000 to $110,000. It sold for $182,500. And finally, lot 218, platinum 18-karat gold and fancy intense yellow diamond ring. The estimate on it was around $180,000. It sold for $235,000. Harold, the auction results we'll be happy to send out to people from Sotheby's Magnificent Jewel Sale on December the 7th. But outstanding results. And once again, here we are seeing great results with not only pink diamonds, we've come to expect that, but yellow diamonds are coming on strong every auction that there is.
How exciting is that, Randy? You know, the fact is that when we first started recommending yellow flawless diamonds as investments, nobody even knew what we were talking about at that point. And the fact is that you could barely find an article on colored diamonds at all, and that was only 6 years ago. Now, look what's happening in the diamond market. We recommended very heavily to our clients to get into the rare colored diamond market because it responds to inflation as well as gold and silver does. In 1979 and 80, these diamonds went up 500% in those 2 years. A $20,000 diamond turned into a $100,000 diamond. And we're looking at the same scenarios now. But again, back then, 6-7 years ago, you know, nobody even knew anything about yellow flawless diamonds. And because I've been through these markets before, I've been in the investment business for 35 years. I've been through the run-up in gold and silver and diamonds in the late 70s, early 80s, so I know what to expect. Yellow flawless diamonds are stealing the show at this point here, and they're amongst the best investments you could make. In fact, there's very few investments that are safe going into 2012 with the potential of the financial world as we know it changing. And in this auction alone, just looking at this auction, out of 4 items that were sold, all at record prices, 3 of them were yellow diamonds. So the first one, lot number 159, it was supposed to sell for about $60,000, sold for $116,000. That's double what it was supposed to sell for. And again, from $90,000 to $182,000, it's double. And it's not that the people at Sotheby's don't know what they're doing. They're very, very sharp. They know what these diamonds should sell for. It's just the times that we're in. We're going into the most difficult, frightening, and dangerous financial times of our life. And if you make the wrong move, you're going to find that you're not going to have your money. And the fact is that we cannot afford to do that because looking back at it, this isn't the 90s anymore when you could have thrown a dart against the Wall Street Journal and picked a stock that was going to double or put your money in real estate and double it in 3 or 4 years. Those days are over. You've got the riskiest markets. The last place you want to put your money right now is into the stock market. You just don't invest in countries like the U.S. when they're going bankrupt. But colored diamonds are not only the safest investment, but they never ever go down in value, and they respond to the troubles that were happening worldwide better than any other investment. Again, in 1979 and 80, when gold went to $850 and silver went to $50, colored diamonds went up 500% in just 2 years. And we anticipate the same type of moves, except this time there's way less diamonds on the market. So basically, if you go to my website, rarecoloreddiamonds.com, rarecoloreddiamonds with an S.com, you're going to see the most beautiful yellow flawless diamonds, and we only offer yellow flawless diamonds. We don't offer anything in the yellows that are flawed because they don't have the track record that flawless yellows do. They just don't go up anywhere near as much. But the fact is that yellow flawless diamonds, normally without even these financial conditions that we're in right now, are a great investment that most of my clients buy for retirement because these diamonds go up by 25% a year every year. They actually go up by 25% a year, so they double every 4 years in price. So again, a diamond that you can buy today, let's say for $20,000, 4 years from now is going to be worth $40, and 4 years after that is going to be worth $80. So the fact is that if you were to take $20,000 and put $20,000 into the stock market and $20,000 into a yellow flawless diamond, we know that in 10 years, your $20,000 on your yellow flawless is going to be worth almost $100,000. But God knows what your stock market position is going to be worth. Could be worth zero. It could be worth way less than what you put in. But the fact is that yellow flawless diamonds do have a track record. Now, my clients that buy these diamonds put them away for safety. Again, we're talking about countries going bankrupt. We're talking about currencies going under. You're talking about an asset that is portable and private. Nobody knows that you own it. You can cross a border with it, and you can sell it in another currency. You cannot do that with any other asset. So diamonds, colored diamonds, are one of the most important assets you could ever own. And if you have money sitting in the stock market right now, I would be out of that and putting it into a safe investment like a yellow flawless diamond. The other thing is, and the age-old problem with owning diamonds is that how do you resell them? Well, the fact is that unless you had a very large diamond that Christie's or Sotheby's would sell, the fact is that it was difficult in the past to sell diamonds. However, for the past 2 years, myself and Relentless Technologies out of Vancouver have been building the only real-time live auction website ever built. I'm the only one that owns it. It's a phenomenal company. It's hsfineauctions.com, hsfineauctions.com. So this was built for my clients to resell their high-end collectibles down the road when the time is right to do so. Obviously, the next 5 years are going to be the best years we will see in diamonds. The next 5 years, we anticipate that these yellow flawlesses will go up 400 to 500%, and we're the only company that has the wherewithal to resell your diamonds for you. We own hsfineauctions.com. In fact, the next auction coming up is January the 16th, and it's a Monday evening. It's going to be 8 o'clock p.m. Eastern Time, and it's going to be 6 o'clock Mountain Time, and you're going to see some of the most amazing high-end collectibles, including pink diamonds, yellow diamonds, beautiful gold and silver pieces. There's going to be some amazing emeralds, rubies, and sapphires, all these amazing collectibles that we've collected over the years that you've never been able to sell before now can all be sold on hsfineauctions.com. We're the only company that has the wherewithal to resell your diamonds. So if you're buying diamonds from other firms, and there are a lot of firms out there that are copying what we're doing, make certain that they're going to be able to sell your diamonds for you, because HS Fine Auctions is only for my clients to resell their high-end collectibles when the time is right to do so. So again, it's a very exciting situation. It's taken us 2 years to build this amazing auction site. We've had 2 auctions so far. They've been tremendously successful. There's been good deals for the buyers. There's been the sellers have been extremely happy with their profits, and again, all in all, for a new company, is doing extremely well. So it's hsfineauctions.com. The next auction is January the 16th, which is a Monday night, and you're going to see some amazing diamonds and collectibles up for sale. We've talked about yellow flawlesses. very, very difficult to get a high-grade yellow flawless diamond except through us. And again, we not only ship the diamonds directly to you, we send you our newsletters each week, we send you auction results as they happen, and when the time comes to sell the diamond, we will sell the diamond for you. The other diamonds that we recommend are probably the hottest diamonds on the market, which are the Argyle pink diamonds. Again, out of 5 diamonds that were sold at the Sotheby's Magnificent Jewel Sale, 3 of them were yellows and 2 of them were pink. So that's the direction we've led our clients to. Those are the hottest diamonds everybody's looking to buy and invest in, and those are the ones that you'll make the most money with. The Argyle mine in Western Australia produces 95% of the world's pink diamonds, and it's going to close down. It's been producing diamonds since 1985. It's running out of diamonds. Mostly these pinks, there's only 200 carats available a year, and these diamonds will go up 8 to 10 times what today's prices are. Meaning if you buy a diamond for $25,000, it could easily be a six-figure diamond within the next 8 to 10 years, because the mine is going to close in about 6 years. Give it 2 years for all the pink diamonds to run out, and then you're going to see the prices of these diamonds skyrocket. Again, 8 to 10 times what today's prices are. If you bought a $50,000 diamond, it could turn out to be a $500,000 diamond. In fact, that's what we anticipate will happen with pink diamonds, because we've recently seen similar price moves in blue diamonds for the same reason. So, again, the world right now, the financial markets are the most dangerous that they have ever been. One slip, one wrong move, and you could find yourself without your money. That is not the way that you need to do things in these trying and difficult times. 60% of your investment capital, believe it or not, should be in cash right now, with nothing in the stock market. The stock market, I'd say you have very little chance of making any money in stocks over the next few years. In fact, we could literally see the Dow Jones in the U.S. plummet all the way down into the 5,000 to 6,000 range, which again would bring your stocks down to almost zero. So all markets have their times. During the good times when the U.S. dollar is strong and the economy is strong and the real estate market is strong, it makes sense to own stocks in real estate. But those are the exact opposites of what are happening right now. You need to own gold and silver and diamonds to get through these extremely difficult times. Again, we've got Europe going under. We've got the U.S. going under. We've got currency problems like we've never seen before. We've got inflation on the horizon that will be astronomical, with oil prices at 150 to 200, and the assets that will protect you, give you the insurance policy that you need, are hard assets. It's been proven in history, and it's happening again right now. Look at these auction results. A $60,000 diamond sold for $116,500. A $90,000 diamond sold for $182,500, and a platinum ring with a fancy intense yellow diamond in it, instead of selling for $180,000, sold for $230,000. So again, you got pink diamonds that were supposed to sell for $100,000, selling for $278,000. I've never led you guys wrong. In the wrong way. We started recommending gold back 10 years ago at $250. It hit $1,900. We recommended silver at $3.80. It went to $50. We recommended oil at $18. It went to $150. Again, I think the best recommendation of all is in the diamond market. I think our clients will make more money in diamonds than anything else, and it's the safest investment, and it gives you all these options. Again, if all the currency markets or a bunch of the currency markets get into trouble, this is the only asset that we could resell in Japanese yens, Chinese wons, British pounds, or whatever the strong currency is. So, again, if we own gold and silver because of inflation, you definitely want to be into the yellow and pink diamond market while you can still afford to get into them. There's going to be a price increase going into January of 25% on the yellow flawlesses and on the Argyle pinks, and it's the cutters, the guys that cut the diamonds, that are raising the prices. When they raise the prices, they go up tremendously. So again, we're anticipating a 25% increase in the prices of yellow flawlesses and Argyle pinks going into 2012. You want to get your diamonds before these prices go substantially higher. Again, with inflation coming, these yellow flawless and Argyle pinks are just amazing investments, and they're never, ever go down in value. They're a very safe investment.
Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com. The telephone number to speak with him personally and privately, 1-800-432-1022, 1-800-432-1022. If If you'd like to receive our free weekly newsletter, Harold will be happy to send it out to you via email free of charge, and speak with him about this week's featured diamond. It's a 0.37 carat radiant cut, fancy intense purplish pink Argyle diamond. As I said earlier, 90% of the world's pink diamonds coming out of the Argyle mine, and here we are as we're days away from 2012. That means another year has gone by, and it means we're another year closer to the Argyle mine shutting down. And once that mine shuts down, 90% of the world's pinks will go away. And Harold, I would think that the prices will, as the years go on, go up very, very dramatically as a result of that.
You better believe it. Again, it's like anything. When you have supply and demand, the fact is that the demand for diamonds right now are extremely high, and the supplies are extremely low. So again, that's a recipe for higher prices anyways, and that's always the way it's been in the commodities markets. But again, diamonds are not traded on exchanges like gold and wheat and oil and that type of thing, so it doesn't have the volatility that those other markets have. It's a very safe market. It's a very quiet market. It's always been that type of market that it's always been secretive. People have transported diamonds in their pockets, across borders, and again, it's the only asset that you can do that with, because if you try to cross a border with more than $10,000 cash in your pocket, it's going to be confiscated and you're going to be in trouble. The fact is that you can cross a border wearing a diamond ring, and it could be worth $1 million and nobody would even know it. So that's why it's always been portable, transferable wealth. It's extremely important to own them, and never been more important than now to own them, because again, you've got all these problems with these countries going under and these currencies going under. So again, there's not a better investment to make at this particular point is to put something away totally safe that nobody knows about, that nobody can touch, that can save your financial life. And again, where there's very few investments that go up in value in this day and age, these diamonds go up by at least 25% a year and never ever fall in price. I know it's not for everybody. The minimum investment is $20,000 to buy a diamond, but again, a $20,000 diamond in 5 years can be worth $80,000 to $100,000. If you've got stocks in the market that are not performing for you, I would pull your money out of the stock markets and get yourself into the diamond market while you still can.
One of the stories that I found in the newsletter, I thought it was quite interesting. I put it in. I don't agree with it, but I put it in, and it is in the stock market section. It seems that there are some people who are so desperate for the stock market to go up that they're coming up with all sorts of predictions. In fact, Citigroup believes there is going to be a massive raging bull market within 18 months as the children of baby boomers start piling into the stock market. And, Harold, I think that nothing could be further from the truth, because you have a huge section of the population, not only in Canada and the United States, going to be retiring, the baby boomers, if they haven't lost all their money in the stock market. And as a result, I don't see the stock market raging ahead. Not at all. And that's the question people need to ask themselves as we are at the end of the year. How did your investments do in 2011? Where do you need to position yourself in 2012 to make sure that you can retire, that you can have some money set aside, and obviously in something that's safe, and make money so you can retire? But there seems to be a desperation for Wall Street to have everyone run back into the stock market and have it like the old days of the 80s and the 90s. And the truth of the matter is, I think those days are gone. There was a long period of time where stocks were the place to be, and now it seems to have switched for a number of years to hard assets. And the hard asset bull market could go on for 20 years now as well. But the stock market, to me, they've done it to themselves, whether it be Bernie Madoff or Stanford Financial. And it was in our newsletter here that Alan Stanford is mentally capable to stand trial, so he'll be heading to trial. And then on top of it, MF Global and then all the other small scams out there. They've done it to themselves, and that's why people are very hesitant to go back into the stock market. We never did get in the year past, we never really did get an understanding of why we had the flash crash. no one explained why we had the flash crash. And yet there's a desperation there for people who are stock promoters on Wall Street to really try and get people back into the stock market, saying that young people are really bullish on stocks and they're not afraid to have stocks in their retirement accounts. And yet the truth of the matter is, I think looking forward, when you take a look at demographics, Harold, it does not favor the stock market at all.
No, not at this particular point. You know, every market has its time. When the U.S. dollar is strong and the economy is strong, the stock market is strong. When it's the opposite, you don't want to be in it, and that's exactly what the situation is right now. It's not that we're against the stock market. I mean, you know, it's obviously extremely important. Most people invest in stocks, but every market has its time, and the amount of money exiting the stock markets at this point is unprecedented. It's never been this high except for probably 2008 because of a substantial fear factor. So you never invest in stocks and mutual funds in a country that's on the verge of bankruptcy, and that's basically the United States, and you don't invest in European stocks. You know, you could even pick one or two stocks that should do very well, like Apple. But when the whole market falls, everything falls because there's margin calls, and these fund managers leverage their positions heavily, and they've got to make margin calls. That's why these markets will remain very volatile. So, again, it's not that we're against the stock market. It's again that it's a situation where if you are there, you're going to lose most of your money. You saw it happen many times in 1999 when the dot-com companies fell out of bed, and companies like Nortel dropped from $125 to below $1. Those are not safe investments, but they were in most Canadian RSPs. So, again, it's not a place of safety anymore. It's not a matter of buying General Motors and sitting back and retiring, you know, in 30, 40 years because the stock has gone up. General Motors went bankrupt, as did a lot of the banks and everything else. So these are not your normal times. These are not the times that you make your normal investments. These, in fact, are the exact opposite. You buy gold and silver, you buy diamonds, you buy art, you buy assets that you can hold that are tangible, that, again, most of your money, or a lot of it, should be in cash right now. Because the fact is that even though you won't make money on cash, you're not going to lose it all, and it's about capital preservation right now. So, you know, the thing that we really need to watch going forward is inflation is going to be the biggest factor. And if you do not have investments that go up during times of inflation, you're moving backwards. And that's unfortunately what most people will do. There's very few assets that do well during times of high inflation. Gold, silver, diamonds have proven in history that they do well during times of high inflation. That's why we've been recommending them for so many years to you.
There's only one company Harold recommends you deal with when it comes to investing in precious metals. That's Worldwide Precious Metals. Their telephone number, 1-866-623-2002. The website, wwpmc.com. And they have reduced their commissions to start a precious metals investment account from 5 to 2% for the rest of the year. They believe the metals are on sale right now, and for a limited time, from now until the end of the year, you can start a precious metals investment account or add to your account at a lowered commission rate. Speak with them, 1-866-623-2002, the website, wwpmc.com. In fact, there's a must-read story in our newsletter. Get our newsletter from either Worldwide or Herald. It's from Myra P. Safong. Silver's a bargain under $30. It's from Market Watch, a great article. And one of the quotes there from Colin Hayward from Gearology says, buying silver under $30 today is like buying it at $5 10 years ago. It's a long article, but it's a must-read. And there are some great predictions for the future regarding precious metals and silver in particular, where we could quite easily see $60, $75, $100 silver in the years to come. That is a must-read article. Also, London Trader, this is from King World News, they interviewed their London trader, and he says there is tremendous silver shortages. And that was before we had a pullback in silver. And he actually thinks that it's going to even take longer to get physical silver as a result of these pullbacks. Harold, we have about 30 seconds left. Merry Christmas, Happy New Year, and Happy Holidays to all of our listeners. And Happy Holidays to you and your family.
Well, thank you very, very much. And the same to you, Randy. Wish everybody just a wonderful holiday. Again, it's been a bit of a stressful year. We're going to get through everything, and we're going to do extremely well going into 2012 as long as we keep our heads about us. We don't trade with emotion, we trade with logic. So again, I want to wish everybody a very happy holidays, a fabulous new year, and we'll look forward to doing our new show in the new year.
We will be taping our show next Friday, so listen next weekend on AM 640 in Chad. Also, you can go to the website, hesradio.com or rarecoloreddiamonds.com, and hear our show. To invest in precious metals, 1-866-623-2002, wwpmc.com, diamonds, rarecoloreddiamonds.com, the telephone number 1-800-432-1022 to speak with Harold about diamonds. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.